is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. Well, the market continues to power higher, almost vertically. Is it to the moon? What does an old school indicator like Dow theory say about the current market move? And the Federal Reserve announces that in November they will start the tapering program, but the market's just shaking it off. Why? And interest rates break out to the downside. What does that mean? Let's take a look at the charts. At the time of this recording, it is 7 p.m. on Sunday evening, and currently the futures are down 6 points, so not a whole lot going on. If we take a look at the charts, you can see, as I mentioned in the intro, the market is going almost vertically to the upside. And if you've heard any of my recordings, you know that I don't like it when things go vertically up, because quite often they can come vertically back down. You have to trade what the market gives you, but I think caution is in order. We've been doing a lot of things in energy, etc., but I much prefer this more 45-degree angle move than this vertical move. You can see that we are still just a bit overbought from the 10-day moving average, and then the gaps still exist lower. All those things I think are concerns. In fact, if you go back and look at our recordings, back on September 8th, we said the market looked good to go up to that 4,600 level or 460 on the SPY. So here's the weekly chart that gave us that 460 target. And you can see here's that upward zigzag that began the entire wave 3 impulse pattern. It's important to note that all impulse patterns, even 5-wave impulse patterns, begin with a zigzag. And there's your zigzag there. So we hit that 460 target at the end of last week, and then this past week we moved to the upside. Now, if you've seen any of my recordings as well, you know that we need to have a follow-through or confirmation bar. In other words, we need to have another week separating where we are from the 460 level. So can we confirm this move above 460? If so, then we have to start taking a look at the potential to go to 547, which happens to be right within this wave 5 forecasted tap box. Now, what we like to look at when we've hit an expected level, which was 460, and have the potential for an extended level, especially in a zigzag or even an impulse pattern, we look at our confirming indicators. And if you've seen this in the past, you know that I've showed how the ADX has just continued to move lower even as the market's moved higher. That's divergence. That's not what you want to show a sign of strength for the market to continue to move higher. Now, on the positive side, we do have a pretty nice cross between the two directional indicators, fairly vertical, which that's when you do want a vertical move, and the ADX is ticking up. Now, it hasn't broken above 20 yet, which is my level, so the ADX has to get above that negative directional indicator and above 20. If it does, then we may have something as far as a continued move to the upside. So what's buoyed the market? Well, the Federal Reserve did announce their tapering program, but they've been buying $120 billion worth of assets a month, and the tapering that they announced was only $10 billion. So they're only going to taper off $10 billion. I think the market was expecting more than that. And so I think that buoyed the market by thinking, oh, it's not as bad as we thought it's going to be. They're still going to buy $110 billion a month. So hey, let's continue to move to the upside. It's just a thought, but I think it makes sense as far as why we were able to power above this level. Now, in the entry, I also talked about Dow theory. What an old school indicator that is. Well, on Tuesday nights, we have our Trade Finder. If you haven't attended a Trade Finder yet, I invite you to do so. You can click the link below this video or go to our website at ewotrader.com. Sign up there. It's free. Every Tuesday night, we look at the markets, and then we go through and find trade considerations, and we have a live Q&A. Well, one of our viewers last week talked about the transports. And so I thought we'd go ahead and look at not just the transports, but Dow theory. Dow theory says that if the market, and I will admit, I spend a lot more time looking at the SPY than the Dow, but even our subscribers in our Thursday night insiders meeting, which is for our alert subscribers only, have been asking about the Dow. So you can see the Dow has clearly moved to the upside. We do have a doji closing the week there, and kind of a gap up move there, looking a touch overbought there as well. Looking at the 10-day moving average, is not a lot overbought, but a little bit, but clearly the Dow has moved to new highs. So Dow theory suggests that when the industrials move to a new high, that it should be followed in soon thereafter, which, what does that mean? By a confirmation from the transports. So if we look at the IWT, you can see that We haven't quite broken to a new high yet. Awfully close. The high back here on May 10th was 282.40, and the high on Friday was 281.45. So call it, we're testing that high from back in May. Is it going to break above it this week? Well, that would be follow-through confirmation that the market could be moving higher. Again, I note that a little vertical on this move. We look at the 10-day moving average, slightly overbought there too, so perhaps a little bit of consolidation here to start the week underneath that level to see if it has enough momentum to break through there. Again, looking at the positives, because over the last couple of months, I have identified some storm clouds and things to be cautious about, but the market's moving higher and you trade what the market gives you. But I did want to take a look at the IWM. If you take a look at the IWM, it has broken out of a range. We've highlighted this on our Tuesday and Thursday night meetings as well. All year, the IWM, the small caps, have been in a range from 210 to 230. And I noted that if we were able to break one of those levels, resistance at 230 or support at 210, you could have a really tradable move. And you can see that, man, that is a vertical move to the upside. So we've been looking for an entry to trade the IWM to get into the small caps, but I'm not chasing anything that vertical, especially when you have separation like this from the 10-day moving average. A really nice move, you certainly have to admit that, but we're overbought right now and we're not going to chase an overbought move. We'll look to see if we consolidate here, if we back a little bit up towards the 10-day moving average. So we are looking to get in there, but not with a move that's this severe. And taking a look at interest rates, I mentioned in the intro, they broke to the downside. Now that was surprising. In the Federal Reserve's report, they said that they still feel inflation is transitory. And I think the number of economists continue to line up with the fact that they don't think inflation is transitory anymore. I think it's here to stay, and we may have some concerns about further inflationary pressures. But I've also mentioned that I think that as the interest rates go, it's going to help determine where the equities markets go. And that's a definitive break to the downside. Now we are creating a wave 4, so we could find some support possibly right here at an area of support at 14, which would give us a wave 4 around 50 to 61.8%. That would be a great spot to have a wave 4 for potentially a continued move back to the upside. The market would struggle with that, but for now, with interest rates breaking down, that's giving a little bit of buoyance to the market as well. So you can see there's some things that are supporting this upward move, albeit awfully darn vertical. Now, if interest rates break down too far, then we have to wonder, all right, what's going on? If the Federal Reserve is tapering, granted they're not tapering as much as originally feared, but who's going to come in and buy the extra amount? Why aren't rates starting to go back to the upside? Is there foreign money coming in? Potentially. But if interest rates break down too far, then I think you have to look at potential economic weakness down the road there as well. So this bears watching. Does the wave 4 catch here at 14 and we start back up? I think that would make sense, but we'll see what plays out over time. Looking at Bitcoin, we talked about this zigzag pattern. Again, impulse patterns start from zigzags right to the 100% level, and we're consolidating. I think this is an impressive consolidation in Bitcoin following this big move with the new ETF, etc. But we have a really nice symmetrical triangle here. So are we going to break from this and create a wave 4, or do we break to the upside from this triangle and go hit that 161.8% extension, which happens to coincide with the tap box wave 5 target as well. So we take a look at the DMI. It's not showing a lot of support for an upward breakout, but again, you're in consolidation. You're in a corrective symmetrical triangle, LA wave triangle. So perhaps that's just the reason that the DMI is not giving a whole lot of potential movement to the upside yet. If we break to the upside, I think the DMI comes along. And so for a short-term indicator, let's take a look at the CCI. It's breaking back down towards 0, but it hasn't broken below 0 and moved down towards negative 100 yet. So that still looks positive, at least on the short term right now. Perhaps by the next recording that we do, we will have a breakout of Bitcoin. But I think, again, caution. Let's wait and see which way Bitcoin moves here before we make any determinations on the next directional move. I thought I would highlight the Nifty again. We've been talking about this all the way since the beginning of September, that as long as the Nifty stayed above 49, you had to stay long. We had that one-day head fake. This is exactly why I talk about having a follow-through, a confirmation day. There was no follow-through to the downside. I'd said that you'd have to be cautious on a confirmed downward move from 49 that would go quickly to 47. There was no confirmation, so it's the same plan on the Nifty. Stay long as the Nifty stays above 49, I think makes an awful lot of sense. Last but not least, as we always do, take a look at the VIX. You can see that we did come down and find some support at 15. Thought we might break that level, head down towards 12. Some of our subscribers have noted, well, why isn't the VIX broken down further as the market moves to the upside? Well, it has been a pretty vertical move, and remember, the VIX is designed for volatility. We come up with the fact that it's a fear indicator, and the VIX tends to go up when the market goes down. But if you have a volatile move to the upside, it's not unheard of for the VIX to move higher as well. It doesn't usually do it for very long, because you usually don't have vertical moves to the upside that last very long. But with a kind of a gap up on the Dow, big move to the upside on the SPY, and the fact that the VIX was up on Friday still bears watching, and I think that adds to the cautiously optimistic tone of the market right now. And the fact that it broke above 16 again, I think is worth noting as well. If you like these recordings, please don't forget to hit that like button. It's very important. It helps us out a lot. Or better yet, hit subscribe and you'll be notified immediately when one of these videos is posted. I hope you found this informative. Look forward to talking to you again next time. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.